Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is President of Asset Preservation Tax and Retirement Services. Stewart, how are you today?
Oh, I'm doing awesome. It's been a crazy ride. You know, tax season is nutty, so I'm trying to deal with the recovery from that. But it's unbelievable.
I know, because you've been so incredibly busy. We were talking before the show started today. Obviously, you're seeing one person after the next due to the show being so popular, which is wonderful, by the way. And you always take the time to come in and deliver fresh content to the viewers at home, and I know they appreciate that so very much. Yeah, we try. I mean, the thing is that we're in such an evolving time right now that, there's new stuff to present all the time. But, I get a lot of feedback from our clients that say, hey, you know what, you need to talk about Social Security a little bit more. You need to talk about the markets a little more. So, hopefully we can, present some of the good stuff as well. Sure. Well, that's a great segue into the next question I'm going to ask you. Stewart, what's going on in the markets right now? It's just pure craziness. I mean, I jokingly say I'm a man of leisure and I like this calm lifestyle, but, we've had it for the last decade. We've had this really smooth market. We've seen an amazing decade of market run. And obviously the Russian-Ukraine situation didn't help it very much by, this invasion has been absolutely horrible. It's, people don't like knowing that war is real. And I think it really brought it home. So if we can get over the sensationalism of the coverage and, people just want to see what's going on, but it's creating this massive uncertainty. Obviously, the initial stage of the invasion created this huge drop, and then we saw this big bounce, and it's really tough to kind of feel it out because you never know where the bottom is, right? Sure. And so we are seeing this, not only massive volatility, but crazy inflation. Before the Ukrainian Russian invasion, what was on everybody's mind was inflation. And look, it's real. Inflation is real. The CPI numbers that are coming out, we're seeing them touch 7% or so. We believe the real numbers, closer to 11 or 12%. When you start looking at gas, it could be in the 13% range. So it's just real. When you're filling up your tanks, it's different. I was one of the guys that bought the big gas guzzlers because gas was cheap. Yeah. Now that it's dropping, or now that it's rising, I think I'm a little more conscious about the cost of fuel as well. And for those people that don't have the high income to support gas prices, it's really affecting them. But let me pull up a chart here. This is our inflation chart. And this inflation chart here will show you we're back to where we were in the 80s. And that chart's about a month and a half or so old now. Wow. We didn't have time to get it up for this show. But, I mean, we believe we're surpassing here what we saw in the 80s. So we are at all-time highs in inflation. We're seeing all-time highs in the market. I know there's been some minor corrections here. But, that's why it's really important to make sure people have a risk profile and a risk tolerance that their advisor really knows. And listen, whether it's us or your own advisor, I think communication is really key right now because a lot of times people were more aggressive in the markets than they probably should have been because it was so smooth. Yeah. Right. Yeah. We saw a decade of constant run up. But you should really be able to communicate to your advisor as a client what your comfort level is with risk. And remember, now we're starting to see a spike in interest rates. We were told that we'd see a 100 basis point increase in the rates. Yeah. And they, of course, the Fed, did it slowly. They only raised a quarter point initially when they, most people really believe that they should be getting in front of inflation because those interest rate increases are probably the only thing that can slow down
inflation. But what happens when you do that, Cynthia? You know, it creates this massive, you know, turmoil in expenses for companies.
Sure.
Lending becomes more expensive.
Yeah.
Then we see these interest rates or these stock values drop. So, you know, it's a balancing act with the market for sure.
Absolutely. Stuart, I have to also ask you, obviously the other topic that people are really concerned about right now would be Social Security. So can you do any planning in that area specifically to help?
Yeah, absolutely. You know, Social Security is actually where our firm really kind of, you know, made our name initially. We were doing these amazing workshops. We'd have 100, 150 people, you know, like at the Arizona Broadway Theater or these other big venues. And we would talk about just Social Security, the kind of planning you could do. And listen, there's been tons of changes to Social Security that people just don't even realize.
Yeah.
You know, the media was pretty silent on them. For example, in the 2015 Budget Act, we lost the ability to do the file and restrict and the file and suspend. So I think there's a lot of misunderstanding about what is available out there. You know, people are hanging on to what they've heard years ago about being able to take spousal benefits and so forth. So I think it's really important that people know the basics, the facts, when it comes to Social Security.
Absolutely. I should also ask you, let's talk a little bit about how seniors are the biggest voting bloc, if you will. So how does that impact how Social Security is decided or planned?
Well, you know, that kind of goes back to our 2015 talk. You know, I always told people at our workshops that the seniors are the biggest voting bloc and that no one would touch Social Security. And you know what? I was wrong. They touched it. And like I said, in 2015, we saw the biggest cuts to Social Security, you know, we've ever seen. So just understand that everything's on the table. You know, benefits that you count on can be taken away. But the facts are, we should understand the basics of Social Security. And the first thing is stop listening to your friends at the water cooler, because, you know, we see more mistakes by people, you know, making decisions because their friends tell them it's a good idea because he's the smart guy or she's the smart gal. You know, get a real professional to help you make these decisions. Social Security is a huge benefit. For married couples, you know, we're seeing between $900,000 and $1.5 million of combined benefit if they live to normal mortality. So, you know, you guys are planning out all of your retirement funds, your 401ks, your IRAs, your Roths, if you have those. Don't you think it's important to plan out Social Security?
Yeah, absolutely.
You know, a couple facts I think we should get on the table. Number one, what hasn't changed are the earliest you could file, which is 62.
Okay.
The latest you can file is 70. But there is a moving part in there, and that moving part is called your full retirement age. Now, your primary insurance amount is determined at your full retirement age. And when Social Security was created, that full retirement age was at 65. Well, now it's merging its way up to 66 and 2 months, 66 and 4 months, all the way up to 67 years old. And the reason I mention that full retirement age is because that impacts a couple things that I think are really important. Number one, if you file for your benefit before full retirement age and you decide to go back to work, well, there can be a big problem with that because, listen, we have clients all the time that come in, they say, look, I'm tired, this COVID stuff, it's killing me, I'm done working. And they go in, you know, retire, and at 62 years old, you file for your benefit. The problem with that is that if you decide that it's not for you, that you don't, you know, just want to sit at home, that you want to get back to work and do something, there are income limitations. You can only make around $18,000 a year of earned income before there's a massive penalty. And for every $2 you make in excess of that threshold, there's a $1 reduction or a $1 penalty. And, you know, I joke about it all the time. You know, my dad, when he was done working, you know, he just said, look, I'm done. And then all he was doing was sitting at home watching, you know, Bonanza reruns and all these goofy Westerns. And my mom was like, dude, you need to get out of the house. And you know, so what if that happens to you? If you decide, hey, you know what, retirement's not for me. I need to go do something. I want to go work at Home Depot or somewhere else. All of a sudden, you limit your ability to earn income.
That's
right?
true.
With these big penalties.
That's
so
true.
I would just say, make an informed decision, really think it through. Don't be rushed to file for Social Security if you don't absolutely have to, especially if you have other assets.
Stewart, thank you so much. I know that you have a very special offer to present to the viewers at home today. Let's talk about what that is and then open the phone lines.
Yes, absolutely. What we're offering the audience today is a complimentary portfolio review. If you're trying to decide whether or not it's time to take Social Security, if you're on the edge of retiring, if you're 58 years old and up, and you know that, hey, it's coming. We know we're going to retire soon. Let's have a plan. Let's make a real plan. Most advisors never consider Social Security because they don't get paid to do that. Let me just tell you, it's a huge mistake. If you just give us a call at 833-652-7829 or click on that QR code on the bottom of your screen, what we're going to offer you today is that complimentary report where we're going to take a look at all of your Social Security options. We're going to take a look at what kind of risks you have in your portfolio, what kind of fees you're paying, and what kind of tax issues are looming in the background there. But you have to take action today and give us a call. We'd be glad to help.
Stewart, thank you so much. To the viewers at home, the number to call is on your screen. That number is 833-652-7829. We know you have a lot of questions for Stewart about how to plan your perfect retirement. He has the answers for you. All you have to do is take advantage of calling in today, 833-652-7829. We're going to take a very short commercial break, but don't go anywhere. I have so much more with Stewart when we return.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing, and 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, 5 years, 3 years, tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes. It's not where are you going to be 5 years from now, 15 years from now. And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president of Asset Preservation Tax and Retirement Services. Stewart, a wonderful show we're having today, obviously talking about such important topics, talking about the stock market, Social Security, if you will. I want to ask you a little bit about the taxation, if you will, of Social Security. What does that look like?
Yeah, you know what? I think it's one of the most misunderstood, things in finance. Taxation on Social Security is something that people thought would never happen. But, believe it or not, it was Ronald Reagan that made it taxable for the first time ever in 1983. And Bill Clinton made it more taxable, despite the fact that Franklin Roosevelt said it would never be a revenue source for taxation. Yeah. So I think, people that understand it get really upset that how are we paying taxes on what we believe is already a tax?
Right.
Right? But here's how it works. Basically, the way it looks, there's a calculation that's called provisional income. It looks at basically all of your taxable income, any tax-free municipal bonds that you have, that includes any pensions, any IRA distributions, any 401k, 457, thrift savings plan. You add all of that up, plus 50% of your Social Security benefit, and if that number is over $32,000 as a couple, then up to 50% of your benefit is taxable. If it's over $44,000, then 85% of your Social Security is taxable. But what I wanted you to hear there was that you have to add half of your Social Security benefit to that threshold. Now, you would say, well, why are they taxing that? Well, those thresholds that were set back in 1983 have never changed. So that cost of living adjustment on $34,000, if you were to add the cost of living adjustment, just what you get from Social Security to that, it'd be over $70,000. So what's happened over the last 20, 30, 40 years is that as inflation has occurred, your threshold hasn't increased with you. So more and more and more people are paying tax on Social Security. It's a big travesty that just people don't think through. So it makes it really important to make sure you're efficient.
Well, Stewart, what can you do? Is there anything that you can help with the taxes on Social Security?
Yeah, the earlier you start, the better. But the one thing to think about is that how do you make less provisional income in retirement without affecting real income, right? You don't want to have to go eat dog food to not pay taxes on Social Security, right? You want to, the goal of retirement is to have a great time.
Enjoy your life.
Right? Yeah. Enjoy as much as you can. But you want to be efficient doing it as well. And one way you can do that is to just have an efficient platform there. And so one tool we use is obviously the Roth. We talk about the Roth almost every show, but I think it's important to realize for people, if they have a 401k, go find out if you have a Roth 401k there as well. And it's really important to understand how much you should put in Roth, how much you should put into the regular 401k. What you can also do as you get closer to retirement, once you're 59 and a half, there are tons of options. So if you have a thrift savings plan or a 401k, mostly you have the ability to be able to roll out a portion of that or all of that fund over to an IRA and then later convert it to Roth. And the goal of that is to pay the taxes on it before you start Social Security so that you never end up having to pay those high taxes on Social Security. Now, that's not right for everybody. You want to consult your tax advisor, which is exactly why we have a tax office at Asset Preservation. You want to make sure it's a right fit.
Sure, that makes sense. Stewart, I should ask you, what about the people that have spent their entire work life putting money into tax-deferred 401k and IRAs?
Yeah, I think that what we're seeing here, especially with all this volatility in the market, people are seeking help, and they just don't know when to ask. And, the one thing I'll say is that people, I hear it all the time. I've been watching this show here for the last year, and I finally decided to call in. And I would just say this, look, we're the same people on TV and in person. We are the same. I'm telling you, we're very friendly people. We love hanging out with our clients.
Yeah.
You need to take action and have a plan. And I'm telling you, if you don't take action today, tomorrow just never comes. You always push it off.
Yeah.
But it's really important to make sure you start creating that foundation right now. Never forget, we are in the most efficient tax window in history right now. Absolutely right now. And that is going away in a few years if Congress doesn't act. So by 2026, the Trump tax cuts go away and forget, all of the political side of whether or not you love or hate Trump. That doesn't matter. The reality is that, the 12% bracket, parts of the 12% bracket were 15. Parts of the 22 were 25 to 28. Parts of the, the 24% bracket were 28 to 33%. So we're at this massive discounted window right now, and you need to know how to plan your retirement in the most efficient way possible, because every year matters. I have clients all the time that have income that's at zero taxable income, and they only use a few $1,000s of their tax threshold and their standard deduction, which is incredibly high right now, which means they could have possibly converted their IRA and 401k over to Roth, paying no taxes at all. It's crazy. Wow. There's free money out there for some people, not for all.
Yeah.
But it's important to understand how the tax brackets work. And that's the whole reason we have a tax office. Listen, running a tax office is the bane of me. I mean, it's the worst. It's so much work. And as a man of leisure, I don't like working that hard. Just everyone knows that's not true. But it's tough. It's tough running a tax office. And the whole reason we do taxes has nothing to do with tax prep. It's tax planning. Yeah. It's the work we do after tax season that makes it all worth it.
Sure. And there's such a difference, Stewart, between tax preparation and tax planning. They're two totally different things.
No doubt.
Absolutely. Well, I know you have a very special offer to present to the viewers at home. Let's talk about what that is before we open the phones again.
Sure, absolutely. What we're offering today, since we're focused so much on Social Security and tax planning, what we're going to offer the audience today is a complimentary portfolio review. And what that looks at is all of the tax issues we see hiding in the background and how that can affect your Social Security down the road. Because remember, if you have a nice income, you've worked for a long time making a good living, your Social Security is most likely going to be pretty nice out there. And so you want to make sure you plan how to make it as efficient as possible. But you have to take action today and give us a call at 833-652-7829, or even easier, pick up your phone now. Click on that QR code at the bottom of your screen there. That'll take you to apsitaxes.com and click on the complimentary portfolio review. We'd be glad to help and get to know you.
Stewart, thank you so much. To the viewers at home, the phone number to call is on your screen, and that number is 833-652-7829. We're going to take a very short commercial break, but when we come back, I'm going to ask Stewart, what should you be looking for in a financial advisor? Stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio, and I'm joined today by Stewart Willis. He is president and founder of Asset Preservation Tax and Retirement Services. Stewart, a great show we're having today, talking about the stock market, Social Security. We went through a little bit of that. This is a very important segment because I want to ask you, in case the viewers at home are wondering, what should they be looking for in a financial advisor?
Well, I think first and foremost, the most important keyword is fiduciary. You know, I think what a fiduciary is an advisor that puts your interests above their own. And I think that is the most important thing. They also can't have any undisclosed conflicts of interest. So it's really important for you to understand that that they get paid a fee to manage your assets rather than hidden commissions inside those portfolios. So I think that's really important. Fiduciary is absolutely what you should be looking for. The other thing is you have to make sure that they're an independent advisor. And by independent, what we mean is that they're not beholden to any one company. And as an independent advisor, which we are, we have the ability to have assets inside multiple custodians. So we can be inside TD Ameritrade, Charles Schwab, Fidelity, some really, really great companies that just hold as custodian the funds that we manage for our clients. So that's really important too. The next thing I would say is to make sure they're a holistic planner. And by holistic planner, what I'm talking about is, of course, they need to be able to manage your money and be able to give investment advice. But they also need to be able to talk about taxes. You know, I keep repeating taxes, taxes, taxes. Taxes can be, you know, as important as the underlying investment itself. So they need to be able to, you know, give you real tax advice, to have a tax staff on hand year round. That's really important. The other thing is, can they talk about estate planning? You know, we've had the same relationship with the same estate planning attorney for almost 15 years here. So, you know, we do living trust for our clients. It's not a profit center for us. I just don't want to hang out with my clients in probate court. Right. So I want to make sure if you don't have a living trust and, you know, you own a home and have substantial savings, you know, I think it's an important thing to give us a call and make sure that your plan is right. You know, that's the other thing. The other thing I would say is your insurance plan. What kind of insurance do you have? You know, is it adequate? If something happens to you, is your spouse okay? You know, and all of those things matter. I think that's really important when it comes time to looking for an advisor, to make sure all those, you know, boxes are checked.
Absolutely, and not be afraid to ask the advisor questions, because obviously, like you've mentioned before, Stewart, and it's so true, communication is key, which actually leads me into the next topic. You offer concierge service. Let's talk about what that is.
Yeah, by concierge service, what we mean is that we are available for our clients 7 days a week. All of my financial clients have my cell phone number, and during tax season, obviously it takes me a little while to get back, may take a few hours to get back, but I think it's really important to have communication with your clients and with your advisor back and forth. And at the end of the day, it makes it really easy for us because, quite honestly, I tell people all the time, I don't do business with people I don't like. And you shouldn't either. So if you have this advisor that you're just like, you're settling, you're dealing with them, but they're not really, your ideal person to hang out with, that's a problem. For me, people don't understand how I can take calls, at 8 o'clock at night or on a Saturday or on a Sunday. It's because I hang out with people I like. I do business with people I like. So it makes it really easy. And I think, when we talk about this complimentary portfolio review, a lot of that is just getting to know each other. Do we like each other? Yeah. Right? Can we help you? Is getting to know each other and liking the person you're dealing with, I think, is a really big deal. Yes, we handle all the financial stuff, all the investment stuff, all the tax stuff, all of that stuff. But at the bottom line, if you don't like the person you're dealing with, you're just not going to want to do your quarterly reviews. You're just going to let it ride. And then those changes that need to be made sometimes just get avoided.
Sure. Well, Stewart, would it be a red flag if someone's in the viewing audience and they haven't heard from their current advisor in, let's say, a year or more?
Yeah, and we see it all the time where they'll say, hey, he was really good at first, and then, we haven't talked in a couple years. Well, it's because this is the secret. It's because people don't make changes. People are stuck in their ways, and they feel, I have a client of mine that has been with the same financial firm for years and, has just dealt with this company forever. So it's just natural to be there. Despite all this volatility, if you are in the same exact portfolio today that you were in, 2 years ago, that's a massive problem. We're in a completely different world right now.
Absolutely.
Right? We're facing potential, world war. We're, all of these crazy, things going on in the volatile markets, the supply chain issues. There's a lot of differences happening right now. And I just say this, if you're not communicating with your advisor, if it's been over a year and you haven't had a conversation, then just give us a call. I think it's really important. You have to take action. Give us a call at 833-652-7829, or even easier, pick up that phone like you do at restaurants after COVID. Click on that QR code. There's a form that you fill out to show us that you're interested in having a portfolio review. We'd be glad to help.
Stewart, thank you for another amazing episode this week. To the viewers at home, most specifically, we'd like to thank you for spending time with us today. That number to call is 833-652-7829. Any questions that you may have about your perfect retirement, Stewart has the answers for you. Don't miss the opportunity to call in. Again, thank you for watching the Asset Preservation Hour. Be safe, be happy, be blessed, and we'll see you back 1 week from today.